This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Let's now take a look at the gold market. Well, on the gold market, I can't say that this was really the drastic change, but in general, after this solid upward action, and especially when the market with this upward candle has engulfed and in fact erased this bearish pattern. I don't know what about you guys, but I have sensed some warning that probably the pattern that we expected to see, this reversal pattern head and shoulders, stand under dangers of that it will not appear, that it will not be formed by the price action. But recent behavior of the market suggests that in general it's okay. So in general, market still deals with this potential reversal pattern, and if you will read the analysis of the weekly time frame and on the monthly time frame, we have noted there that on the higher time frames the price action to the upside is not really impressive, and we do not see any significant changes as on the monthly time frame chart as on the weekly time frame, especially on the weekly. In fact, this action on the weekly time frame looks like the bearish engulfing pattern. Okay, that's particularly bearish. But despite all these negative moments, we can't say yet that price action on the higher time frames of the gold market has erased the possibility of the reversal here. So still, the deep retracement could be triggered in the long-term perspective. That the nearest target of this potential retracement, as we have estimated previously, stands at 1360 area approximately, and the chances for this retracement still hold. Particularly speaking, our invalidation point in the long term is these lows. So if market will take out of these lows, we could say that, well, it's probably market will proceed right to the 11 even 10 or 8 area, 10 or 18, somewhere in this area. But until this will happen, the chances will exist. The early signal of the possible failure of the market to show the reversal could come around this area, where the bottom of the right shoulder should appear. If market will, by some thrusting action, will erase this possibility and will not form something of that sort here, well, in this case we could get the early sign that probably market will really fail with this upward reversal and it really could go to the downside. But right now we stand in the halfway between the neckline of the possible reverse head and shoulders pattern and on the bottom, to the bottom of the right shoulder. And as we have got their bearish pattern on the weekly time frame that has been completed, we have the bearish trend as on the weekly time frame chart, as on the daily time frame chart. We'll start the trading of this week on the bearish side, because the intraday charts, intraday patterns also suggest that market should continue some deeper move to the downside. In fact, we partially discussed this moment on Thursday when we have announced our suspicions on this bullish stab grabber. I don't have the MACD predictor here, but you probably guys remember that. At this moment, we say that the price mechanics, the price action inside of this candle on the intraday charts looks wrong compared to what we should see when the market is forming the stab grabber. That's why we have suggested that probably market will erase this candle and continue move lower. That has happened, and that put the foundation to appearing of the final part of this reversal pattern, that is the right shoulder. So our trading plan here on gold market is as follows. The first part of the week we probably dedicate to trading on the short side of the market with the target around 1215, 1220 area. When and if market will reach this area, we will turn to the bullish side and we'll try to find the bullish patterns right there until we will not get the clear signs that market has failed to reverse here and continue move down. Until market will stand in this area, we will search the possibility to take the long position. I hope that we will get it, because the potential of this trade is really significant. As I said, the nearest target is the 1360. This is not just an extension on the weekly time frame chart, but that is an area of the yearly pivot point. That's also very thrilling moment for the gold market. Well, now if you take a look at the forward time frame chart, here we have in fact the same picture that we have discussed on Thursday. That is our ABC top pattern. We said this market is showing really fast action to the downside, and the CD leg is much faster than AB. It points on the possible continuation. In the most cases, when the market shows the acceleration on the CD leg, it tells that market will proceed lower, even will try to reach the deeper target, not just the 100% extension that already has been tested, has reached, but has not bad chances to continue move lower. And take a look, that is our primary target objective with this short trading. That is the combination of the 1618 extension of that ABCD pattern and next fib support. Here you can see that market already has twice reached this support area, that is the 100% extension in agreement with the 1242 fib support area. Also take a look that market has created the bearish stop grabber right here. Here it is. So this pattern suggests that market should take out at minimum these lows, but it's very close to the current price level. But in fact, this pattern could put the foundation for just downward action. It could just trigger it. Well, also our expectation of retracement after the reaching of this area has been achieved with even with the 100% probability, that we said that market probably will show the retracement to the 1250-1255 area. That really has happened. So as market already has shown the response on this support, this retracement, theoretically following them again to the market mechanics, should not be as extended as the previous one. It should stick somewhere inside of this most recent swing. You could call it some sort of the bearish engulfing, it looks like, but that's not very interesting for us. The most important for us is that this retracement should stick somewhere inside of this most recent swing, inside the swing of the bearish stop grabber pattern. But here there is one tricky moment exists, and you will see it on the hourly time frame chart. Take a look. That theoretically, although I prefer to see the not very significant retracement, and personally the first level that I would like to watch for is the short entry of 1250. This is 618 resistance of the most recent swing down, okay? But existence and appearing of the weekly pivot point for the next week makes the situation a bit tricky, because market could try to test this level before it will turn to the downside. And since we know the cunning of the gold market, the market in reality could show some sort of the ABC bottom D pattern right here. And as this target of this pattern stands just slightly higher than the previous swing high and slightly higher than the bearish stop grabber, slightly higher than the weekly pivot point, it tells that if even market will reach this area and wash out these highs, it will not necessarily mean that the bearish setup has failed. That's a bit advanced moment, since this action will be based mostly on the gravitation of the market right to the target and the attempt to achieve this target, then changing in the sentiment. That's why if you would like to take the short position, and you for instance would like to take the short somewhere on this fib resistance, you should place stop slightly higher than the target of this ABCD pattern, because if you will place them somewhere in this possible range of the CD leg, market could trigger a stop, it could be stopped out, but the sentiment, bearish sentiment, still will hold. The market will just flirting with the weekly pivot, complete this pattern, and turn to the downside again. That is also possible. Just keep in mind on this moment, although I hope that we will not see this, and I hope that market will stick somewhere inside of this range, will show some retracement and turn to the downside. Maybe even some butterfly will be formed or something of that sort. I personally, I prefer to see this. But if this still will happen, don't be surprised with it. And that is our mostly invalidation point. So if market will proceed slightly higher than this ABCD target, it's around 1256 approximately, that will put under question the further downward development. But I hope that this will not happen. And guys, just keep in mind this potential tricky moment that could appear on the gold in the beginning of the week.